Happy Thursday, everybody. I hope everybody's having a good day. I know we don't usually do Thursday videos, but here you go. I do think we need to do one today. As many of you are thinking I shouldn't be wishing anybody a happy anything based on what the stock market's been doing so far this year. But I want to do a short update video today because we're almost at the end of a pretty brutal week to have owned stocks. So I'm not going to sugarcoat it. This has been a pretty rough week. To put a fine point on it, the NASDAQ index is down 12% in 2022. That's the worst start since when? 2008. Now, if you've blocked that time from your memory, good. But you may recall that the NASDAQ finished 2008 down 40% on the year. Another interesting comparison between now and 2008 per LPL research, the only other time where we've seen a 4% S&P 500 dip in one day and that market come back and close positive that day happened twice. Both of them in October 2008. So why would I tell you something like this? Am I out there to scare you? No. In fact, what I wanted to do is tell you specifically how different it is today than it was in 2008. We know that 2008 was leading into the financial crisis. We are anywhere but that right now. So Dan Ives of Wedbush Securities, he's a well-regarded tech analyst. He said that the underlying growth drivers of the tech space today are unmatched to anything we've seen since the mid-1990s, and they are not being priced into stocks at these oversold levels. So what has changed and what has not changed in 2022? Just a quick reminder, and then I'm going to broaden out a little bit of these comments away from the tech sector, but first let's focus here. Let's first recall that the NASDAQ has had a pretty incredible 3 years. 35% in 2019, 43% in 2020, and 21% in 2021. There's a question, are we ahead of ourselves in the past few years? There's also been unprecedented growth in this space. And although the rising interest rates and other Fed action do change the landscape a little bit, the overall thesis has not changed. The growth is coming from what they call the digital transformation. And still in the early years, you've got electric cars, you've got connected devices, you've got cloud computing, you've got artificial intelligence. The need for these products and services and the products and services that these large technology companies sell has never been more important right now and is going to continue to grow. Those stocks that don't make money, the stocks that have been trading on hopes and dreams, that's where we've got to be concerned, and that's where we'll have to make some changes if necessary. Now, of course, we all know that some of those stocks are going to be the next Amazons and the next Netflix of the coming years, but many more of those will not. So doing this now for close to 30 years and studying historical moves in the markets even longer before that, this is the same old story, going back to the tulip bulbs in the 1600s, anything electronics in the 1950s, and of course anything .com in the late 1990s, 2000s, it always the same way. There are times when everything's going to work, and so everything has to be bought, and everyone explains away the valuations, and then finally the stocks fall. This is the normal action of the markets. Remember, we've not had a 10% correction in the market since March of 2020. And on average, we have one 10% correction every year. Now, we have had one 5% correction last year, and on average, we have 3 per year on the 5%. So volatility is due, and we have it here. So there are the haves and the have-nots in the market. What we need to do is focus on the bargain hunting and with the right set of filters. As you heard me say last week, and I've said it many, many times, the stock market's the only place where people run away when things go on sale. So I want to add a few more things. Let's close with a few minutes of an attempt to summarize what we have going on. Why was the market down? We know this. First of all, there was the items I mentioned before. This is how the markets work. They don't just go straight up. Additionally, also mentioned before, there have been a lot of money chasing the hopes and dreams stocks, and we have seen it time and time again. Who wants to pass up the next Tesla or the next Netflix? Additionally, we have the Fed. They will be less accommodative for sure, and they will be fighting inflation, one of the 2 major mandates they have. By the way, the second mandate is employment, not stock market going up. So I do think that we're pricing in a tough first half of the year. Historically, the first half of midterm election year is a tough one. We're seeing that. And add in geopolitics and, of course, COVID, we have the makings of some rough roads in the shorter term. But if you look to the second half of the year, and remember, we're long-term investors, second half of the year is not too long to look out. We should have supply chains getting better. We should have labor shortages getting better. Inflation should be getting more under control and getting better. COVID should getting easier to live with, and more certainty on what the Fed's actually going to do. And then you go into a post-midterm election cycle. Q4 after the midterms historically has been very, very good, as has been Q1 and Q2 of the following year. Those are historically good quarters. This could look like a very good second half of this year. So there you have it. Some good, some bad, some ugly, but we're here to keep our eyes on the goals and be able to be nimble when it's necessary. We know that the VIX index measures worry in the market. And what was quoted on the LBL Research podcast this week, the higher the VIX, the higher the clicks. So when you have questions, call me, email me. That's what I'm here for. So keep an eye out. We're going to keep these videos coming if we need them. Watch for tomorrow's Friday planning video, and hopefully we'll see again one on Monday with the market update video from there. So and we'll hopefully be able to wrap up this crazy week of trading on Monday. Have a great day and have a great rest of your week.